Here we are. Well, good morning, everyone. Thank you for joining us for another edition of our weekly real estate backstory. My name is Alan Richardson. I'm the managing broker here at Maximum One. And every Monday morning between 8:30 and 9, we normally kind of roll off with our real estate backstory. It's kind of the comings and goings, the things we see happening in the real estate world, and kind of what we want to kind of prepare you for the upcoming week, and as far as all that goes. So I want to kind of jump into immediately, and by the way, no Ming with me today, so it's just me today. So but I want to start off with what sets off a successful CEO. I mean, what makes a successful CEO great? What sets them apart as being an amazing CEO? And the reason I want to talk about CEOs is because you are all CEOs. You're CEOs of your own company. You own your own small business company. And so, at this point, you are the CEO. Now, the other side is that you are also employee number one, but you're also the CEO of your company. And so, what are you doing to prepare your company? Because there's four big traits, four major behaviors that really successful CEOs exhibit. And so the first one is that they decide with speed and conviction. And that's so important, is that you have to make decisions. This is what we're going to do, and this is how we're going to do it. And I'm going to lead us in this way. The second thing that really successful CEOs do is they engage with impact. And so, they engage their employees, their customers, their clients, and we have to do that same kind of thing and engage them with impact to be able to really guide them through, everything happening in the market, that kind of stuff. Third thing is that they adapt proactively. And the proactive part is the really, really important one, especially in changing economic times like we have right now. The things that we're doing in the real estate world, maybe to be successful right now, if you aren't being proactive about what's happening in the marketplace, you may be behind the eight ball. So we have to be able to adapt proactively. And then the last thing is that we have to be able to deliver consistently and reliably, that we have to have good systems in place, and that we make sure that we deliver in a very reliable, consistent manner. And so, as the CEO of your company, what are you filling your head with? The average CEO also reads 60 books a year. So 5 books a month is kind of what the average CEO reads. And so you need to be able to be filling that up in your head. You need to be able to be putting new information in and be ready to constantly be learning. Now, for a lot of us, I know a lot of folks that unfortunately don't read a lot, and we need to read more. But the other thing is that you need to have a lot of different information coming in. And so we have the Tom Ferry Summit coming up here really soon. And so it's going to be on August 23rd, 24th, and 25th. And so we have 3-day summit. So I'm going to go ahead and share my screen here. And so, the live stream is coming up. It's going to be in all of our offices. So we're going to be shooting this live or playing this live. Now, when you come to one of our offices for this, here's the deal. We want to make it as close to the experience you have if you were going to go to the actual summit in Dallas. So, we print off all the books and we engage with everyone the same way. And, when the crowd jumps up and goes, well, we all jump up and go, and that kind of thing as well. And so, we want you to kind of experience that same kind of excitement. And then, everything is kind of shot out just like if it was on the front page, or if you were sitting in the, in the crowd kind of thing, as it were. If you were sitting at one of those tables right in the middle of the room. And so these are some of the topics that they're going to be covering, booking 100 appointments in the next 12 months, breakdown to breakthrough, journey to journal. I like agent to investor is one that I'm looking forward to see. Broke no more, from negative net worth to multimillionaire. That's going to be a good one. Ultimate listing launch strategy, another important one. How to recession proof your business. And that's something that, are we heading into a recession or not? We'll talk a little bit more about that in a minute. Lead gen, doing a lot more lead generation, those kind of things, what's driving our market, handling listings, with the future of luxury, what we're seeing happening in the luxury market, how AI is transforming, more lead generation stuff. Then they have some keynote speakers. They have folks from Keeping Current Matters, things like that. All kinds of information, scripts, leadership, action plans. So, I'm going to encourage you to please set some time off. We try and put a lot of energy into this event because we know that it can help you grow your business. We're going into, I would say, a little uncertainty in the market. There's a lot of things going on. And if you always do what you always did, then you always get what you always got. So it's time to make sure that you look at what are you pouring into your mind, what are you refreshing up on, and what are you staying really up to date with. Now, moving back into the more pressing matters of the real estate world. So the very first thing up is that mortgage rates have dropped. They've dropped below 5%. Whoop, whoop. And so I am really excited to see mortgage rates, but we're going to keep seeing these things fluctuate. It's really interesting how the Fed raised the mortgage rate or raised the federal funds rate by 3/4 of a point. And now mortgage rates not only dropped from the high fives down to below 5, and we're at 4.99, officially under 5, not by much. But the whole idea is that this thing is continuing to drop down. And so, first of all, when the Fed raises rates, how come we're seeing interest rates fall? Well, understand that interest rates are not, especially mortgage interest rates are not tied directly to the federal funds rate. Interest rates are tied to the 10-year Treasury. And so if you laid the 10-year Treasury out and you laid out the mortgage rates, you see that they kind of go hand in hand. And so when there's a lot of market volatility and when there's a lot of things happening, out in the markets that moves investors over into the 10-year Treasuries, well, then that's something that when more people are engaging in 10-year Treasuries, those rates go up, interest rates go up. And so, there is some correlation between federal funds rate and interest rates, but it's not a direct correlation. And so what we're seeing is that right now the market, well, first of all, the market was really happy to kind of see the jobs report that came out last week. We had like 500,000 jobs created last month. So it's a very different place where we are at the moment in the current place. So overall, also, we're seeing mortgage demand inching even higher. So applications continue to rise. And I think with more folks that realize that we're at a 4.99, that's going to get even more interest in what's currently going on in our market rate. So we should be talking to our clients. We should be speaking to them about, look, interest rates drop some more. Might be a good time to go ahead and get in a rate lock right now, because we are going to keep seeing volatility in the mortgage market. This is not like, okay, we've hit the peak and it's going to come back down. This thing's going to go up, it's going to go down, it's going to move all the way around. So we need to be ready for that. But now, if I had clients that was interested in buying, I'd be looking at locking in, under that 5-point mark if I could right now. And so that would be a really good thing to be kind of leaning our clients towards. I want to talk a little bit about apartments, which I know, we tend to mainly rely on single family residential, but here in the Atlanta market, this is what the rent growth has done since March 2020. Overall rents have increased by 21.4%. And so that's, rent growth is continuing to really move up month over month. Average rents are going up by almost a 1% month to month, about 12% a year. And so we're kind of running on that month to month, every month. Rents are continuing to increase. So the idea that I'll just rent because it's going to be cheaper to rent than it is to buy, this is kind of what our trend is looking like on rents. And so the same as we've seen property values appreciate, we're seeing rents do the exact same thing. However, if you keep renting, you're never going to grow any substantial wealth. Wealth in the United States is tied up in home ownership. And so we really want to encourage folks that if you're going to rent or you're going to buy, you're going to be there for at least 4 or 5 years, you definitely want to buy. You want to be able to be engaging in that market because this is where we're going. So overall, at the same time, vacancy rates are at the lowest they've ever been. So homeowner vacancy rates is at 0.8. Again, the lowest vacancy rate of all time. Renter at the same time, 5.6 is the lowest renter vacancy rate of all time. So we have to be ready to understand that this is still a supply versus demand issue. We have to be conscious of, even when we see a lot of things happening in the market, we still have to understand that what's really going on is that we have way more demand than we have supply to meet. And that's going to continue to drive our market as we move forward here. So also at the same time, this past month, we had the largest inventory gain in 12 years. Now, what's interesting about the inventory gain that we have is that the largest inventory gain is coming from not so much from new listings, it's coming from existing inventory and where our sales are not really matching up to it. So when you look at this, largest inventory gain in 12 years kind of thing, the other thing I want to kind of caution you is when you see a headline that says largest inventory gain in 12 years, you think, wow, things are really going crazy. And so, yeah, while we did see we are seeing much more inventory in there. We would need this pace for 6 more months to drive appreciation back to a 5% rate. And so, or appreciation. So even if we keep this pace going on for the next 6 months, we would still only be at 5% property value appreciation. And that's if we do that for the rest of, or for, all the way into, February, March of next year, that kind of stuff. And so, there are some markets that are seeing a lot more slowdowns than we are here in the Atlanta market. The Atlanta market is really experiencing much more stability when it comes to that. So overall, nationwide, we're facing about 716,000 shortage on listings. All in all, a total of about 5 million households here in the U.S. So we still have a lot of ground to make up as that goes. At the same time, we have homebuyer competition is dropping to its lowest level in 2 years. You'll see that number, and so that will definitely. Sorry about that. And so that's another headline that will be like, wow, that's kind of startling. And so it says bidding war rate dipped below 50%. All right. 49.9% of home offers still faced competition. So it's not like this has been a huge drop kind of thing. At its highest rate, it was 65%, and it was 57 earlier and that kind of stuff. So yeah, we see that competition is lowering. It's just not that much lower. So are we in a session or not? Right now, that's the big question, because GDP is down, and normally the traditional definition of a recession is 2 consecutive quarters where GDP is down. However, jobs are up, and jobs are up really big. Now, also at the same time, inflation's way up. Normally, that's not the same thing, and at the same time, consumer spending is also up. So is this a recession or not? These are weird times that we're in. It really is, because that traditional definition of a recession, there's so many other positive things that's happening at the same time. And, this is not like other recessions that we've had. And so, Lawrence Young, the chief economist for National Association of Realtors, he's like, even if there is one, it's likely to be very, very mild. We have really strong job creation. And at the same time, commercial real estate is really growing. Commercial real estate is highly tied to the economy. So we're seeing both those factors really that are not responding to, quote unquote, a recession. Now, for us in the residential side of things, we have to understand that recession does not equal housing crisis. And so you can kind of see what's happened anytime that we've had, these are the past 6 recessions that we've had. And only the recession in 2008 did we have any sizable drop in property values. But let's face it, we were part of the problem for part of the cause of the recession in 2008. We were all Oprah Winfrey of real estate. You get a house and you get a house. If you get a Pulse, you get a house too, kind of thing. And so times are very, very different than they were right now. We also see that home ownership rates in the U.S. Have increased, and that's a really good thing. That means that we've got more first-time buyers continuing to fight through. We know it's a challenging market for first-time buyers. For our move-up buyers, it's a much easier market because they've already captured a lot of the equity. But for our first-time buyers, it's much more challenging. So, but we are seeing where they're taking advantage of that right now. And so here's where our numbers are looking. And so we can see that our median sales price is up about 8.5% year over year. And so we're still seeing high property value increases right now and higher listing prices. And so overall, our median list price is around 13% higher than it was a year ago. And you can kind of see where that's been. And so is that level fluctuating and starting to level off a little bit? Yeah, and I think it will level off. I think we'll start seeing it start to be much closer with last year's here really soon. But I don't think it's that we're looking at any kind of drop or any kind of substantial drop, especially not here in the Atlanta market. Overall, homebuyers' mortgage payments, they're up significantly from last year, but you can also see where they're dropping, right? And so it continues to drop right now. And so what we're seeing is that our buyers have really had to make thoughtful choices about, okay, I can't afford as much house as that maybe I was pre-approved for before, or the pre-approvals that I have are not the same. And so we're seeing where the overall mortgage payments are continuing to drop. Pending sales are down about 16%. We have seen where, you know, the dollar amount is up, and about correspondingly the sales volume is down about the same percent, which for most realtors ends up being with kind of a net wash at the end of the day. And so we are seeing pending sales trending down right now. New listings of homes. Now, new listings is down 11%. This is one thing that's very interesting about our market at the moment, because new listings are down. Okay, new listings are not up. New listings are down. Everyone's talking about inventory. Inventory is rising. It's not new inventory that's rising. And that's what's really, really unique about where we're at right this minute, because the number of new listings coming on the market, that's not really helping us out. It's where our total active listings. So we're having listings that are sitting on the market longer. And so we have a lot of buyers that are seeing the same houses over and over again, but we're not. So we're seeing less sales, which means that we're starting to see higher days on market, which is why we're also seeing a lot of price reductions, but we're not seeing a huge influx of new listings jumping onto the market. So even though there's been a pickup in the inventory, you know, it's not from new listings. It's from a slowdown in the pace of sales. It's really what we're kind of seeing. So, you know, that's one of the big changes about what we're seeing happening in there. Still, almost 40% of our contracts are under sale within 2 weeks. So if a property is priced well in a good location, it's going to sell, and it's going to sell quickly still. There's still a lot of demand we have for the market, for what's going on in our market. Right now, we finally moved up over last year, where the total homes sold, our average days on market ticked up by a whole day. And so we're not seeing a massive shift, but we are starting to see a slight increase in days on market, which we need. For a balanced market, we need 6 months of inventory. Right now, we're running 21 days. So we've still got a ways to go. 45% of our homes are still selling at or above list price. Again, this is not this big shift, immediate hardcore shift. Our market is moving much more like a herd of turtles than it is anything else. Now, price drops, like I said, we're seeing more properties take a price drop, and so we're seeing where those sellers that threw a house out there at a higher price point are getting kind of a little bit of a reality check. I mean, you see, we don't have a lot of listings coming into the market, and so the listings that are sitting there, if they want to sell, they're going to have to reduce the price. And so the days are gone of just throwing out any kind of price out there and just waiting until somebody's willing to pay for it, or people competing on that same kind of level. We're just not seeing that market activity happening right now. It's still a good market. It's not bad, but the days of the sellers holding all the cards in the transaction, that's not here either right now. And so right now we have more price drops than any time we've seen since 2015. Overall, we have less offers being received, less offers over asking. Our sales numbers are down, however, and our inventory is slightly moving up. Moving on into as far as other market information, Zillow and Opendoor have announced a partnership. So I know that a lot of us, do Zillow leads, that kind of stuff. Please understand, Zillow is not your friend. I know that they are a huge aggregator of data, but right now, they couldn't do iBuying, and so now they've moved over and partnered up with Opendoor. And so just and I'm not trying to bash anybody. I promise I'm not. But you have to look at, if you're getting all your businesses from Zillow leads, well, look what Zillow's doing. Zillow's now trying to move more and more folks over into Opendoor. Now, at the same time, guess what we had this past week? Opendoor got fined $62 million for deceptive practices. So the fact that Zillow announces a partnership with Opendoor almost in the same week when Opendoor gets fined for deceptive practices, I think is a little bit telling. And so Basically, the FTC came out and said, stop deceiving potential home sellers and stop making baseless claims. And so to the tune of $62 million, we're not talking like a little slap on the hand. $62 million, that's a pretty serious kick in the stomach. We'll just go with that one there. So, they said that, you can't tell, basically they were quote unquote lying to folks about, you can save money going this way as opposed to it. And I know that there's a time and there's a place when some sellers need to go through the iBuyer or the instant offer route, a lot of times for speed, but I've never seen where it saved them money. And so I think that's kind of very telling. We need to be very, very wary but the other thing is, if we have to be ready to communicate with our sellers. I mean, our sellers are interested in knowing what Opendoor and OfferPad and these kind of guys will pay them for their house, how much that they're willing to do that. And so we can submit those offers to them and for our clients. And then my favorite thing is to sit down with a client and say, here's what OfferPad will pay you, here's what Opendoor will pay you, and here we pulled a CMA, and this is what a buyer's willing to pay for your market or for your home in this current market right now. Which way would you like to go? And at that point, we are the brokers of information now, as opposed to just like acting like our sellers don't know that these kind of companies are out there. All right, so this week I'll be here in Conyers, and so I'll be teaching Ultimate Buyer today and Ultimate Listing on Wednesday. Tuesday we have our sales meeting in all of our offices in person, and then on Friday back here in Conyers, Ming is going to be teaching Take Me to Closing, Show Me the Money, and she'll be having some time with the closing attorney as well as with the lenders here. So I hope you guys have a great week. If I can be of any kind of service, please call, text, smoke signals, whole 9 yards. We answer it all. Have a great week. Bye.